FOMC, baby. Well, not quite yet, which will be in the next few hours. So if you are new, passing through to the Traders Reality channel, welcome. My name is Tino. And you need to subscribe, simple as. Why? Because we're going to be doing the biggest live stream that this channel has to offer, where we're going to be tuning into good old Jerome Powell and his we need more data live stream. That's what we're doing. It's a very big day for the marketplace, ladies and gentlemen. Now, if you're a Forex trader, you'll know that a day like this really is going to dictate what we can expect over the next or during the current quarter, or what we can expect until the next FOMC meeting. Now, if you're a hedge fund manager or an institutional trader and you're still watching the live stream, mad love and respect for passing through. You're going to be wanting to understand what the next step is with regards to interest rates. Why? Because it's going to dictate whether or not you are going to be borrowing dollars, you're going to be borrowing euros, you're going to be borrowing yen, you're going to be borrowing Swiss, or you're going to be borrowing the pound. Now, if you're going to be doing all of that, then it's going to be determining whether or not you buy NASDAQ, stocks, Bitcoin, gold, US bonds. Now, what's the overview? Well, according to the street, the expectation is Fed's going to cut the rates in the future. What I'm going to do is I'm going to share to you some information on investors' expectations of where we are with regards to the interest rates. Fundamentally, if you're going to do trading, or you're a hedge fund, or you've got a portfolio that you really want to try and diversify with, the basis of your investing is going to be on where you can extract cheap money and how you can achieve a yield from doing that. So today's a very important day for everyone across the board. Now, the problem with today is it's not just a normal FOMC. We've got tariffs, we've got inflation, we've got a stubborn labor market, tensions overseas. We've got inconsistency with Donald Trump and his tariffs. We've got a potential discussion between US and China, which effectively led Bitcoin's pump last night. And of course, the NASDAQ making a nice little move higher on the grounds that there is some progress with regards to trade talks. But the most important thing is the Fed. And that is, in my opinion, is what we're focusing on today. So tonight, when the FOMC is released, I will be going live before the actual FOMC, and the FOMC is going to be split in two segments. At 7 p.m. UK time, which is 2 p.m. Eastern Standard, that's when we will get the federal funds rate, followed by the actual FOMC projections, economic projections per se, okay? Then we get the FOMC press conference, which will be 30 minutes later, okay? So I'll be going live roughly around 6:30, well, about 6:15, 6:30, depending on what's going on with assets across the board, so that we can then get ourselves prepared and work out exactly what the market is going to do next. So again, if you are new, hit the like button. That's how you check in this channel. And of course, hit the subscribe so you get notified about tonight's live stream. Now, with that being said, let's get with the flavor, ladies and gentlemen, break down exactly what is going on. So, yep, we get a nice little pump from the NASDAQ and everything across the board, given that there was a conversation on US and China trade talks. It says here that the US stock futures rose and dollar snapped 3 days of declines as China and the US prepared to hold their first confirmed trade talk since President Donald Trump unleashed his global tariff war. What I'm going to show you right now is going to help you understand exactly what the story is with the trade war, okay? Courtesy of the Financial Times. In front of you is this flow chart of exporter to importer, okay? Now, let's just start off with the US. In terms of importing, you can see that the US is one of the largest consumers, near enough, okay? You can see nearly 3 trillion, okay? Nearly $3 trillion worth of imports coming into play as such, okay? Then you've got China over here as one of the largest exporters, which is going over to everyone else. This is why I think China isn't fussed. And I think it was a bluff. when they said that they don't mind if they don't do trade with the US. I mean, look, they're the largest consumer, okay? That's why you've got deals coming in, or supposedly deals coming in from loads of other participants saying that we're going to do work. We're going to do these deals with Trump. Trump even said yesterday that we don't even need anyone to sign anything, okay? Just come to the table and say you're prepared to work with us. Happy days, and let's move forward. He said that in his little meeting yesterday with the Canadian Prime Minister, all right? So it's not that they need the deals to solidify it. Just come and have a conversation and say, yeah, you're prepared to work with us. Happy days. You want to come and shop in the most luxurious shop in the world, being the US, well, you've got to pay to play. That's the story. Now, let me show you something. Look at the US as an importer. Now look at the Eurozone as an importer. They're still going to China. So this is what frustrates Donald Trump the most about the Eurozone. Because the euro, in my opinion, is the only currency that could. Now, some of you might challenge this, but every Tom, Dick, and Harry that represents banks, okay, or speakers, they will always say that the dollar will always remain the world's currency, reserve currency. It's the main one, okay? Euro has a much better standing chance as the alternative, as the world's currency. Some of you might beg to differ, but it makes up 56% of the transactions that make up the dollar dominance. Remember, the dollar dominance is a basket of assets, okay, that are traded against the US dollar. The main one is the euro, the yen, and the pound, okay? So with the euro being such a massive weight of that dollar dominance, it would only be the next currency that could be the world's currency, okay? Principally, all right? Reserve as such. So China ain't really too concerned if they're missing out on the imports of the US. But when you think about it, kind of puts things into perspective as to why, without the US, China is going to struggle. It really is. And that's what's going on, because China's economy is slowing down. And we know that from what? Oil. Do you remember when China had put the stops or were closed up shop during COVID? And there was this delay on when was China going to reopen its borders as such. The impact of that had sent oil's price down. China is the world's factory. When oil's going up, it means China is doing business. China is not doing business. Oil's prices are going down. And that's the problem. Now, it's great for consumers in the US because oil is down. And that's why we've got this reluctance from the Federal Reserve about cutting the interest rates, because it means that the economy can sustain itself. Yesterday, or should I say on Tuesday, we had the ISM Services PMI coming in showing 51.6. Since July 2024, there has not been a single contraction in that sector. So the last contraction was 48. The reading was 48.6, right? Since July 2024, it has only ever been in an expansionary phase, which means it's been trading above 50. So you can appreciate why the Federal Reserve is reluctant to cut the rates, because technically speaking, the economy is still doing okay. But the GDP has contracted for the first time since 2022. And that's a little bit of an alarm bell for everyone, because if your GDP is contracting, it means what you're consuming is not bringing anything back. And that's a bit of a problem. Federal Reserve expected to hold rates steady amid growing US recession concerns. Recession. The classification of a recession has been changed in the US, all right? They usually say when you get an economic contraction over a number of quarters, then yes, you are going into a recession. But the problem is we had that, but they said, no, don't worry about it. And what wasn't making sense before was the market was seeing the interest rates were going up and up and up. They were aggressively increasing interest rates. Yet the market was just consuming. And that was, of course, because of what was going on with AI. And everyone was feeling like they were missing out on the opportunity. But now the reality of things is now starting to come into play, okay? We are seeing the contraction in the GDP. We're seeing some sectors in the manufacturing department industries that are contracting, what services isn't, okay? You've got this recession, or should I say inflation, that is sticky. It's not even going down, even though the rates are so high. You've got a bond market that is neither here nor there, and that's only because of the confidence that investors are thinking that they may not actually believe that the US can sustain itself. They've just recently increased borrowing by another 568 billion. So they've added that to the sheets. So yeah, maybe a recession's coming into play. Who knows? But the thing I want to address to you all is this. In front of you is the actual target rates for investors' expectation of where we are with interest rates. Now, listen, this is all going to help you understand where we are with Bitcoin. Because if you're going to buy $50 million worth of Bitcoin, you sort of would assume that you are going to be in the know, and there's going to be a friend of a friend who works with a dude at the back of this shop who knows a dude who works in Wall Street, or you play golf with and he's a best mate with him who's banging his missus anyway. So what I'm trying to say to you is you're going to be in the know about what's going on in the financial world. The expectation is that interest rates are going to stay at 99% chance that they're going to stay at 4.25, 4.5%. Current rates around 4.33. That's the range. Okay. That's this meeting. Now we go into the meeting on the 18th of June, because you've heard them say that in this meeting, they're not going to cut. The next meeting, they could cut, or next year they could cut, or by the end of this year, they could cut. Goldman Sachs, they expected 3 rate cuts this year. Now they're saying they're not. Okay. So there's always going to be a change in the expectations of investors' approach to believing whether the Fed's going to cut or not. And it is data dependent. That's the problem we've got. Now, 18th of June, 2025, the logic says that they're expecting the interest rates to stay at 4.25, 4.5%. Why is it that they expect it to stay the same? Because tariffs. We don't know the true impact of tariffs yet. Trump has been throwing the idea of tariffs, and we know we had these 160% tariffs, 200% tariffs, and whatever, okay? Then he's come back and said that tariffs are here to stay. And then Levitz turned around and said that we're not going to ever get rid of tariffs, but we are going to keep it to a minimum. And 10% looks like it's the number that we can all work with. So it looks like tariffs are here to stay, but we don't know what the impact of tariffs are, full stop, okay? So investors are betting that it's 69% chance that they're going to keep it at 4.25%, but some of them are leaning towards the idea that we could be going to 4 to 4.25% rate. That's in June. So we're going to go with the idea that they expect it to stay the same. Of course, data that will come out next week, which is the CPI, that could then change this for the meeting in June to suggest that, yeah, we're probably going to keep the rates at 4.25%. That's going to then obviously have an impact on our dearly beloved euros and our dearly beloved yen. Why? Because if the interest rates are going to stay high for a longer period of time, then what's the point in keeping my money in dollars? And it's expensive to do so, to borrow dollars. And I've got a really depreciated dollar. What's the point in holding that asset right now when I'm generating a much better rate of return in euros? We go into July. July puts things into perspective for us. July, it starts to change. Investors have an expectation that around 55% believe that it's going to be 4 to 4.25%. Some are still on the idea it could stay at 4.25, but now getting closer towards 3.75, 4%. 20% of the investors are on that belief. So these are the probabilities right now. Then as we go into it, September 2025, we then have a complete change where the norm right now is looking like 3.75, 4% as the rate. Yet we still got some participants on the belief that 4 to 4.25 is still there. And then it's starting to come down on the idea that maybe 4.25, 4.5% is something of the past. Then as we get closer towards October, now remember, whilst all this is all coming into play, you've got earnings coming out from companies as well. Quarter 2, 3, and then you're going to end up into fourth quarter earnings. So if those companies are going to be declaring losses and not hitting their estimates, given that I actually believe that the tech market right now has fluked it with their quarter 1 earnings results, okay, this right here then sort of gives us the expectation of where the market believes the Fed's going to end up. Look at how sort of evenly distributed the rates are between 3.5 and 4%. So the idea here is, in my mind, is that by the time we get to around October this year, The expectation of yield on the dollar is going to be less, but it's going to be cost effective to borrow dollars, given that at 3.5% to 4% rate, that's still relatively high when you've got candidates like this. Look to the left of this, where you've got Canadian dollar, 2.75% on the interest rate, euro at 2.4%, the yen at less than 0.5%, and then you've got the Swiss franc right there at 0.25%. Naturally, investors are still going to go over to this. And the only thing that they could really go over to is the euro, because the rate at 2.4%, they're also looking to cut it again. So it's going to be even cheaper. So quite frankly, when I look at this, I say to myself, by October, if the Fed hasn't got to cut down the interest rates down to what, 3.5 to 3.75%, that's just going to cause a problem overall for the marketplace. The dollar will just completely go down and it will really slow things down. But it can also stimulate the economy massively if they do. And that's what we're looking for today. We're looking for Powell to say that when we do cut, we're going to cut aggressively. Because in the past, they did some really crazy increases in the interest rates. They hiked up pretty quick. But if they are going to show a slowdown in the cuts, the market will not like that. They really won't. And then that's where I believe that assets across the board will then start to feel the pain of that. Because if they can believe in the future that the idea of quantitative easing, because right now everyone's looking at quantitative easing, but what you've got is just a slowdown on quantitative tightening. It's slowing down. It's not, they're not easing the liquidity in because you still got the high interest rates. I believe that if the Fed in this meeting tonight says we're not cutting the rates, and when we do cut the rates, our expectation is by October, or they'll say this year. They will say this year. They won't give us a date, but they'll say this year we are looking to cut the interest rates by a whole point. That would be awesome. So then that'll bring it back down to where we're at right now, between 4 and 4.25. We could even go down to 3.75 to 4. It'll be a wonderful cut. They want to see 4 basis point cuts. Awesome. Okay. And it'll be like, the market will just be so happy with that because then they can start going back into dollars. But right now, ladies and gentlemen, the dollar itself is deeming itself pointless. There's nothing for it to do. Look what happened last night to the bonds market. It gapped down. That's not good, ladies and gentlemen. We said that they would come and close this gap. There's your gap getting closed right now. When the bonds gap down so aggressively, it can lead to something. If the bonds are down and the yields are up, who's complaining? The government. Why? Because they're offering a higher rate of return for investors to start putting their money into bonds because they need the money. So if they're not going into bonds, where are they going? Remember, bonds are low risk. If you're not in low risk, where are you? Are you in cash? Well, hold on. Let's see if they are in cash. No, they're not in cash because the dollar's still depreciated down to 98. So you ain't even got any purchasing power. You are literally 2 points away from purchasing power. So where are they? They're in high risk. They're in NASDAQ. They're in S&P, right? They could be in Bitcoin. They could be in Solana. They could be in Ethereum. And what's even more interesting, BlackRock ETF inflows have surpassed gold. Well, that's interesting, isn't it? That's showing commitment. Let's quickly go over and look at the Arkham just for a split second to put it into perspective. 619,000, ladies and gentlemen. We're getting close. Look, man, some of these institutions combined hold more Bitcoin than good old Satoshi. Of course, he ain't been buying or selling at all, but, you know, Wall Street's got your Bitcoin, ladies and gentlemen. That's sad. I've said this before. Wall Street's involvement in cryptocurrency is the biggest money heist on earth. That's the money heist. You all wanted Wall Street. You got Wall Street. Now your supply is there. You ain't going to touch it, are they? Well, naturally, your value of Bitcoin should be increasing if it's all going over here. But Wall Street doesn't work like that. What does Wall Street like? Yield. When they get it, they take it. Okay? Now, to put into perspective about what we've got going off today. 7 p.m. UK time, that's when the FOMC live comes into action, right? Federal funds rate, FOMC statement. Sorry, not the economic projections. It was federal funds rate, FOMC statement, then 7:30, the press conference. In the press conference today, we are looking for Powell to give us a timeline on when the rate cuts are going to come into play and how aggressive those cuts are going to be. If he starts beating around the bush saying that we're going to wait and see what happens with the data, your inflation is down. Okay. So, like, what more do you want, bro? Like, okay, do you want the labor market to contract even more? Do you want to get it to 6% before you do anything? All right. So we've got to really pay attention to what Powell is going to reveal in that press conference. There will be questions about the tariffs, and I'll be very surprised if he doesn't talk about the GDP, given that it has contracted for the first time. And I'd love to know what those reporters are going to reveal in terms of questions on how Powell is going to address the idea that the GDP has contracted. And it's going to probably end up being one of those blame Trump kind of stories, which will then naturally lead Trump to come onto Truth Social and start saying that Powell is this, Powell is that. Powell's going to say something today that's going to trigger Trump to say something, okay? And go back to the idea, oh, we got to get rid of Powell. You know, and that's that. We don't want that, ladies and gentlemen. Speaking of which, what's Trump getting up to today? We're going to get into a little bit of price action right now. He receives his intelligence briefing at 11 a.m. Eastern Standard. Okay, 12:30 p.m. He's going to participate in a swearing-in ceremony for the ambassador to the People's Republic of China. That's going to be interesting. And then someone's bound to ask him, what's the relationship like there with the trade tariffs and what have you? Then at 1 p.m., he's going to have lunch with the vice president. So he might be having a conversation there, even though it's closed press. And then by 1 p.m. again, he's going to have a press briefing by the White House press secretary, Caroline Levitt. So she's a beast, but she's going to probably mention something about trade as well. So it's going to be a pretty interesting day, to say the least. But I do believe Trump's going to say something straight after FOMC. I really believe he's going to say something after or during FOMC, and that would be amazing. That will be something to witness. If one of the reporters says, Trump has just posted on Truth Social saying X, Y, and Z. Do you have any comments on that? Powell will shut it down. And he'll be like, I'm not in a position to be talking about anything political about the FOMC and all of that stuff. Anyway, let's get into price action. Let's have a look at what's going on. So, Bitcoin, what we got? So, what I like to do when I'm getting ready to look at the markets and anticipate what we can expect throughout the day, I always like to look at what the big money's doing. So, from the perspective of bonds, they took a smack to the downside. The 2-year yield is up. The 5-year yield is up. The 10-year yield is up as well, but it's only up fractionally. The 30-year yield is currently trading negative because investors like the idea of getting nearly 4.7% or more from last night on the 30-year bonds. That's cool. So let's go and have a look at the Eurozone itself to see where those guys are at. Are those guys actually getting into shorter-term dated securities? So what we got here, we got minus 0.34% on the 1 month, and then we got a positive reading on the 3 month. 6 month is minus 0.84%. 9 month is down minus 137. And we can see that there is quite a bit of a contraction across the board with the yield bonds of the German bond market. That's really good because that tells us that the actual bond asset itself is appreciating because these are the yields. Okay. So we know that they're actually going into European bonds, and Trump doesn't like that. But you can see that's the evidence there where money's going. That's going to tell you what's going on with the markets. If they're not going into the US bond market, they're going into the European market because the rates right here are showing you that that's what they're earning. So it only makes sense. So that means we could only be on the assumption that we're going to have a negative day on the dollar and we're going to have a positive day on our dearly beloved euro. Euro could be in line for a pump today, depending on what Powell says. Okay? Gold. Now, gold has come back ever so slightly, but you do have the tensions overseas between India and Pakistan, right? But gold is very close to its all-time high. If Powell says we're cutting the rates this year, gold goes up. Simple as that. Why? Because gold is being played as a macro right now. Anyone talks bad about something, they go into the safe haven of gold. Anyone says anything about interest rates coming down, they go into the safe haven of gold. Because interest rates going down against the US dollar means you're generating less of a yield on the dollar, so you're better off going over into an asset that technically generates a zero yield, but it's what investors in Wall Street do. They go over to gold. And the expectation of interest rates being cut means that gold's price is going to go higher. So we're going to be looking at another all-time high today if gold really does, or investors start to come into gold on the idea that the Fed's going to give the market what it wants to know about interest rate expectations in the future. So That's what we've got to be paying attention to today. But I will say to you, it might be a very, very volatile day if Powell doesn't give what the market wants. Already we're seeing dollar yen trying to make a little bit of a base right here. And if dollar yen holds out in this range right now, then there could be the promise that dollar yen starts to shoot up, which will then naturally mean the yen itself goes down. And even, even though the yen itself is looking like it's pulling back ever so slightly, we need to just wait and see if it can actually sustain itself in this range right here between the 0.00699 region, or the whole number of the 0.007. And if it can hold that point, then we understand that the dollar itself, the market hasn't got what it wants, and effectively going into the yen and the euro. So those assets would appreciate, okay? What I do want to draw your attention to, guys, is to pay attention to Aussie yen. Now, Aussie yen is still trading sideways. That's what NASDAQ would be doing as well. So if you just simply add NASDAQ to the chart, just to understand the relationship between the two, you can see that they are very positively correlated to a degree. How on earth is Aussie yen and NASDAQ positively correlated? Two completely different asset classes, but the key aspect to it is this. It's what the currency asset itself is being used for in relation to the NASDAQ, okay? It's the carry trade. And what the carry trade in terms of Aussie yen is, you get two low yielding assets. That means you take the yen or the dollar as low yielding assets, right? You then get those and then convert them, depending on which one it is you've got, and you go and get yourself some Australian dollars. And then you get those Australian dollars and you put them to work and go to the NASDAQ. And you can see that that's what's going on. You can see, look, it's literally like for like, all right? But sometimes what you can see, just to understand the relationship of money, if you were to now add the euro to this chart, what you then tend to see is this. Look at this. There we go. Hold on. EURUSD. Let's add the euro to this, okay? You can see, right, that euro sometimes and the NASDAQ, this is really important that you work on this, because it will then demonstrate to you what investors are actually doing, okay? So let me just remove all of this, okay? Here's the purple line, which is the euro, right? So let me just zoom in for a sec. Let me make it a little bit bigger. There we go. So here's the euro, which is the purple line. Here is the NASDAQ, which is this pink line, okay? Now, what are you seeing? You can see that there is a negative correlation. When euro goes up, the NASDAQ goes down. All right, you can find those correlations. All right, why? Well, we've been talking about it all week. The reason why you see that correlation happening, look, when euro is down, NASDAQ is up, because logic says that when investors are buying US stock, what are they doing? They're using dollars, right? So when they're using dollars, it means that they're exchanging other assets that they've got, such as the yen and the euro, Swiss franc, Canadian dollars, getting rid of that, converting it over to US dollar, and then US dollar gets used to buy stock. So that's why when you see the euro against the dollar going up and the NASDAQ going down, you'll know that the dollar's going down because investors are selling US stock and then going into euro. Why? Because they've made their money on buying the US stock market. So they consolidate that, get rid of the dollars and put it back into euros. So what we're witnessing here is there's different investors coming into the market, okay? We've got probably the investors of the US market going into the European market because A, it's cheaper to do so, right? B, you earn more money exchanging into euros. And C, when you convert euros, or if you have euros, you can get yourself a ton load of dollars, okay? So investors might want to wait for the sweet spot for when the euro is so expensive that when they do decide to convert their euros into dollars, they can then get those dollars, get them converted from euros, buy a ton load of dollars on the cheap, then put that dollars to work in the stock market. You'll then see the correlation split where euro goes down, the stock market goes up, Aussie yen goes up. Okay? But right now, we have investors in the Eurozone. We do. Because it's cheaper to do business. So what does that mean, Tino, for Bitcoin? That's what you're all looking for. You're looking for that logic. But take these practices, understanding the carry trade, understanding the relationship between the euro and the NASDAQ. No one talks about that. Why would they? What indication am I using? What indicators are you using to find that out? It's human nature. It's the behavior of participants. If NASDAQ's down and the euro's up, it's because what, the dollar's down and the euro's up? No. Participants are going over into European stock because it's cheaper to do so. 2.4%. They already think that the expectation of value across the stock market is too much anyway. So what we're effectively looking for today is euro to dump, dollar to go up, and everything across the board to shoot up. Because the dollar is so low in its purchasing power, even if the dollar were to go up, right? It's going to encourage investors to buy Bitcoin and buy assets across the board. Why? Because they're seeing that the dollar's value is going up and the purchasing power is improving. So as it's rising, their idea is that I'm earning more Bitcoin. I'm having to use less dollars to buy more Bitcoin. And I want to try and take advantage of that little rally. But right now, the market's flat because the dollar is down. And now an investor's going to come to the chart and be like, right, in order for me to buy Bitcoin, it's going to cost me a lot more dollars because I've got zero purchasing power on my dollar. Does that make sense to you all, ladies and gentlemen? Does that logic make sense? Did you learn that? Have I told you something that none of you ever knew before? Can you please let me know if that's the case before we get into a little bit more price action with the Viva La Bitcoin? Let me know. Any questions with that? Why are you talking about seashells? What's going on? Tina, why are people mentioning if Powell says this or that, he says nothing? Never mind. I think that as soon as investors realize when what the EU wants to do with its digital euro, they will run like hell from the Eurozone. Yeah, but listen, you're going to start bringing in digital currency. You've got to really kill the idea of the legacy markets. People are too used to paper. And that's the problem, you know? When will you go live for FOMC? Of course, I'm going to go live for the FOMC. If you are new and you haven't subscribed, make sure you subscribe because I'm going live for the FOMC later on this evening, ladies and gentlemen. Okay, I'm going to put a post on the community post on YouTube. So make sure you keep an eye out on that and I'll give you the times when I'm going to go live. Okay. Tina, where did you find the risk on, risk off chart? It's just a sentiment chart. This one right here. Risk on, risk off sentiment. But listen, be mindful with this because this is over a prolonged period of time. Okay. It's a snapshot of the risk. Okay. But the way you really understand things about the marketplace is just literally what I just gave you right now. Okay. About the Aussie yen, about the euro and the NASDAQ, because fundamentally the charts themselves just represent people's expectation of what they think now, what is perceived value now, right? Then our goal is to try and work out what the perceived value is going to be in the future and how we can anticipate that maybe Bitcoin could pump tonight. That's what we're looking at. Now, when we look at Bitcoin's order flow, we've got ourselves a very interesting story. Let's just go back to this. I spoke about this morning to the Platinum members. You see this consolidation range on Bitcoin. For God's sake, man, he always does this. I just despise it. Go away. Go away. Okay, why have I got this there? Stop it. Anyways, okay, look. You see this consolidation zone, right? Inside of this consolidation zone is behaviors of investors where they bid Bitcoin, where it comes down, and then they sell the Bitcoin. Right? They bid it again, they sell it. They bid it, bid, and then they sell it. They bid it, and then they sell it, and then it starts the rally to the upside. No more Uranus, ladies and gentlemen. We're going to the moon, man. Then you get this range. You get bids in, bids out, bids in, offer out, bids in, offer out. Then you get consolidation. Then you get this big duration of bidding. And then out of nowhere, Bitcoin burps and everything comes up. Now, true technical analysts would be like, it's going sideways, it's going to break out. Sideways is history repeating itself. Yeah, you know that dude was like, yeah, you know that one, yeah? That's your that's retail technical analysis. Right? Okay, cool. Now let's just really apply logic to it. Right? Consolidation. Okay? Now, look at this. What do we see? Right? And if you've been with me for a while, please tell me what does it look like we are getting ready for? Are we getting ready for people to buy Bitcoin or sell Bitcoin? Please say the right answer. I'm hoping the majority of you do say it, right? But how many of you believe that we are now heading into a selling phase of Bitcoin or we're in a buying phase of Bitcoin? Go. Buy. No, 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 no. It's not buying. It's not buying. It's not. It's not buying. It's not buying. It's not. I'm sorry. It's not buying. There they are. Pattern watchers have woken up. Selling. Yes, it's selling, 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 selling. Look at you all. Wonderful. Selling. That's what we want. We want them to sell. Because unfortunately, the dudes that typed buy are going to be the ones that are being sold to. I'm trying to not let you guys be that. Yeah? We want them to sell their Bitcoin. Because selling footprint is there. Maybe this could be something for today. We don't know. But the market is what looks like to be in a selling phase. You don't understand what I mean by selling and buying. To simplify it, look at this. You've got this area of green. $37 million worth of Bitcoin was picked up at 94,100. Do you think he's going to sell it when price drops? No. Because he's buying it as people are selling it. He's there like, I'll have that, please, bro. Thank you very much. You know, I'll take that from you, you stupid. I'll take that. You're selling your Bitcoin. Send it this way. I'll take that. He's the one that's buying at that point. You're buying up there. You're buying up there. You're selling to him. Okay? So when I say to you we're in a selling market, they look like they want to get rid of their Bitcoin quick time. So these are the volatility traders. These are the guys that are like, yeah, I want to get this Bitcoin sold because my expectation of the future ain't looking too good. Can we solidify the expectation of the future not looking too great? Shall I start with the Eurozone where they're only picking up 1 year, 1 month and 3 month and 9 month bonds? What the? Are you serious? 1 month bonds? Is that what's moving in the markets today? What about your 10-year and your 30-year and your 15-year bonds? Why aren't they really doing well? Investors' expectation of the future is limited because of tariffs and what have you, okay? But when you understand the types of phases that Bitcoin is in, when price rises, they're selling it. And to eliminate anyone from saying that what you're saying is flawed, answer me this question. Define to me why price stops rising. Don't talk to me about resistances. Because you see resistances as a wall, as a ceiling. Oh, can't go any further. Oh, yeah, can't go anymore. Yeah, cool. Just because I drew a line across my chart on TradingView, that's resistance, ladies and gentlemen. If they break it, it becomes support, whatever, right? But why does the market turn after it's going up? If anyone says that's because there's resistance, because there's too many sellers, no. If you think it's because there's not enough buyers, that's the worst thing you could say. Because retail's conditioned to believe that when prices are rising, they have to buy it because they're scared they're going to miss out. So they buy as it goes up. Resistances are formed when the sellers want to start bidding. You will always have a supply of buyers, right? There will always be demand for buyers. There may not always be demand for sellers, but people naturally have an optimistic point of view. So they will always consume, right? When you understand that, you'll understand that after the price has been rising so much, it's not because the buyers are in, it's because the sellers are allowing you to buy. So when they stop their selling, the market algorithms register that we've got all these dudes down here. Remember yesterday's analogy on the mountain? Hey, I'm buying. What's happening? The market then goes back down to really take the liquidity of those guys and get the guys who have been selling from the highs to start buying again. And that's why you get the peaks, troughs, and what have you. It goes up, it goes down, which is technically the rise, the retrace, the continuation. And that's trading 101, in my opinion. Anyways, so with that little lesson right there, mad love and respect. If you are new to the channel, get yourself prepared for this. Go to the website, download this PDF, watch this video. And if you haven't got the hybrid system, become part of the Discord, install the indicators with this little video right here, and just get involved in the community. And of course, if you want to become a platinum member, or you want to get trade setups on every day that we do with various assets across the board, Euro, NASDAQ, Bitcoin, Solana, Ethereum, gold, then become a platinum member and you'll be able to get those setups and get lots of fun and games behind that as well. All right. Everything you need is in the description of the live stream. I will be tuning into you all later on this evening. Please trade safely. It's FOMC tonight, man. Peace.